So we've been gone for 2 weeks since I did the last show, and a lot of things have happened in the market. Inflation is the big story right now. That's all you're hearing about. Energy prices at the top of the list, food prices. But, you know, in the 2 weeks that I've been gone, since I've been here with you live, gasoline prices are up 50 cents a gallon. It's unbelievable. I came in this morning. I actually filled up my tank. I didn't even look at the receipt. I get plus. I don't even know what I paid. But I'm sure it's a lot of money. I'm sure it's over $5 a gallon. So regular at my local Wawa was $4.71, the highest I've ever seen. And on the Parkway, which is always higher, I saw $4.81. And it's going over $5 real soon. JP Morgan came out with a report this week saying gas prices are going to hit $6.20 by August. I mean, what's that, another 30% from here? I mean, we haven't even hit the peak U.S. Summer driving season, which happens, you know, after Memorial Day. But they lay out the reason why. I mean, refiners are not producing the same amount they have. They can't keep up with it. And we're going to have shortages. I mean, it's one thing after the other. You know, we'll talk about baby formula in a little bit. But, I mean, inflation is one thing. Shortages are another thing. Also, there's major shortages of diesel fuel. Certainly coming here. This is the headline. Major trucking firms prepare for imminent diesel shortages in the eastern half of the U.S. That's here, my friends, New Jersey. Major trucking fleets across the eastern half of the U.S. are preparing for an imminent diesel shortage, according to logistics firm Freight Waves. So not only is diesel at record highs, as far as the cost goes, now you may not be able to get it. And why is that important? Well, everything is delivered by trucks or rail, and they run on diesel. Now, the fact that the prices are at record highs right now is going to filter through to the cost of the product, obviously. But what happens if there's shortages and there's rationing? Then nothing gets anywhere. You want to talk about empty shelves? People, I'm telling you, you have no idea what's coming down the pike. You have no idea. The shortages, the food shortages, the shortages of just major products. It's coming. You know, there's delays in this stuff. But if you follow, you know, the websites and the organizations that I follow that track this stuff, they're warning that the second half of this year, we're going to have shortages of everything. Everything. And now they're talking about shortages of diesel. From this article, it says here, Northeast may run so low on fuel within the next week or two that stations in the entire region could go to allocations. And pockets of the Northeast may be completely out of fuel. Now, one of the big problems here is we're diverting our oil to Europe. Check this out. Now, Europe obviously is trying to wean themselves off of Russian energy, so we're helping them. So we're shipping oil to Europe that we need here. And this is going to affect our gas supplies, our diesel supplies, the cost of it. And if you have no diesel fuel, trucks don't run. And if trucks don't run, there's no deliveries of products. And forget the price. I mean, the price of diesel is going to continue to go higher, especially with shortages. But it's all Putin's fault. We wouldn't be shipping oil to Europe if it wasn't for Putin. But why are we doing that? Why is it our responsibility to give Europe our fuel so we'll be short? It's incredible. Markets continued their volatility the last few weeks. Last week especially, some very, very concerning economic news is coming out now. We've been warning you about this for some time. Retail, Target came out and their shares crashed this week because their profits have dropped because of inflation. They haven't been able to pass on all the increased costs. So even though their sales have gone up, which they will go up if everything costs more, their top line will go up, but the cost of their products have gone up a lot. And Target surprised the market and had very, very bad earnings. Their earnings were $2.19 a share. The estimate was $3.06, so they missed by almost $1 per share. And their stock crashed. Target stock was down 20% in a day, the biggest crash they had since 1987 crash. The day before, Walmart came out with the same kind of news. Also, they're saying that consumers now are beginning to pull back on discretionary items as they struggle to buy essential items amid the worst inflation in 4 decades. So consumers really right now are really stressed out. Everything's going up. They could barely afford it. 2/3 of Americans are paycheck to paycheck, so any increased cost is really burdensome. And people are really having to make decisions on what to buy, if to buy, how to feed their family, how to fill up their cars. Many people are not using their cars if they can avoid it. Stock market's been paying the price this year. More volatility this past week. The Dow was down 1.5% for the week, and that was the good average. Year to date, the Dow is down 14%. You want to talk about 401ks getting devastated? Listen to some of these numbers. So the Dow's down 14% year to date. On Wednesday, the Dow dropped 1,165 points. We're starting to see these 1,000-point days to the downside. And I wouldn't be surprised if we didn't see a 2,000-point down day or a 3,000-point down day in the Dow. So Dow lost 3.6% on Wednesday. And this is following the news of Target sales and Walmart sales and the consumer pulling back and inflation taking a toll on everything. But it gets worse. The S&P 500 was down over 3% for the week. Year to date down 18.14%. And on Wednesday was down 165 points or 4%. I mean, we're talking about one day here. The NASDAQ, the worst index of all of them. These have all the tech companies in it, the Facebooks, the Amazons, the Teslas, Apple. NASDAQ was down almost 4% for the week. Down a whopping 27.14% for the year. The NASDAQ was the darling. That was the one that was going up every year. That was the one everybody was making money on. 27% decline. Down 4.7% on Wednesday alone. The market is in trouble. And we've been warning you about this for months. To lower your exposure to the stock market. And it's not over. This is just the beginning, in my opinion. I think we have much more downside ahead. And scary downside ahead. Because of all the things we've been talking about. Inflation, corporate earnings, the consumer pulling back, rising interest rates. The Fed came out this week and said, look, we're going to do everything it takes to fight inflation. Which means that we're going to raise interest rates enough to put the economy in recession. And the reason why the markets went as high as they did is because of all the free money that was being printed. Now the opposite's taking place. And we're starting to see a crash in housing. Of course you're going to. Mortgage rates for the week is 5.25%. We haven't seen 5+% mortgages in years. And we've seen mortgage rates just in the last 6 months go from 3.5% to 5.25%. Which is pricing people out of the market. They can't afford it. It was tough enough with prices going up in homes for first-time home buyers. Now you have the prices are up and you have mortgage rates up. This is economics 101. Rising interest rates is terrible for housing. So the Federal Reserve, by raising interest rates, are causing another housing crash. Demand is slowing, especially in entry level. People trying to buy their first houses. Investors who are buying all the houses, remember we were talking about that you're competing with investors. They are pulling back. Home builders are coming out and they're making statements about this. A Dallas builder came out and said interest lists are shrinking and buyers are truly pausing. A Houston builder said many first-time buyers simply no longer qualify for the increase in interest rates, with the increase in interest rates, as their debt-to-income ratio gets out of whack. Another builder said traffic has been cut in half since the hike in rates. Investors are evaluating the investment more critically than in the past. A Washington, D.C. home builder said traffic half what it was in March. So we're seeing people say, wait a second, I can't afford this house. I'm not going to go out there and get a 5.25% mortgage. So the Fed is hell-bent on tipping the U.S. economy into recession as fast as possible. They feel if they push us into recession and we have asset declines, your value of your home goes down, the value of your 401k goes down, people will stop spending money and we'll have inflation come down. All right, we'll have inflation come down. But we're going to have a housing market crash. We're going to have a stock market crash. And we're going to have a financial crisis worse than we had in 2008. It's just amazing what the Fed's doing. They're really forcing us into an economic crisis. Yeah, that may help with inflation, sure. We'll have deflation. Everybody will be going bankrupt. Your houses will be going down. People will be walking away from their mortgages. Stock market will crash. But we'll get that inflation under control. Oil prices this week closed on Friday at $112, almost $113 a barrel, up again. That's why we're seeing gasoline prices go up. All you got to do is watch the price of oil every day on CNBC and just see where it's going on. If you see the price of barrel oil going up, you know that the pump prices are going up as well. We had 10 straight days last week of record high prices in a row. Every day, the price of gas has gone up. Now in Seattle, a chain of gas stations have reprogrammed their pumps to handle double digit, meaning $10, $11, $12, $13 a gallon. And some in the industry are saying that's where it's going. We're going to be looking at $10 plus gasoline maybe. What'll that do to the economy? 10 days in a row, record highs in gasoline. Just amazing. And of course, it's having an effect on all markets. Goldman Sachs economist warns U.S. consumers maxing out credit cards will lead to late 2022 spending collapse. I told you 2 weeks ago that in March, credit card debt soared to a record $52.4 billion. That's the increase in 1 month, double what was expected. And there's this unprecedented rush right now to buy everything on credit. People just have spent all their stimulus money. They see inflation, so they say, I better buy some stuff now. And they're maxing out their credit cards. Not a good thing. Not a good thing, especially in a declining economy, an inflationary economy. People have no choice but to use credit cards. Disaster. What are some of the economic trends that we're seeing now, which really points to a very bad second half of 2022. 85% of Americans believe that the economy is going to go into a recession sometime soon. 85%. And when you have people feeling that way, their economic expectations are negative. It's terrible. People stop spending money if they can. They pull back on discretionary things. Oh, well, honey, we're going to keep the car. We don't need a new car right now. We're not going to go out and buy a new TV. We're just going to buy the things that we need. So what are some of the economic trends that are going to have a negative impact on the rest of the year? Well, gas prices, as I said before, every day it's hitting a new high. And they're saying that supplies of gasoline and diesel are going to be tighter in the months ahead, which means higher costs and maybe even rationing. There's one thing to pay more money for something. There's another thing not to get it at any price. We're being warned also that there could be extended blackouts in some parts of the country during the summer months. Remember last year we had problems in Texas. It was too hot and their grid couldn't handle it and there was rolling blackouts. Well, 100 million Americans face power blackouts this summer as overstretched power plants and unreliable green energy sources become a perfect storm. The supply chains are being stretched. And as I said on previous shows, I mean, in China, they've shut down the country. Shanghai, big port area there. They had 3 cases of COVID, and people are locked in their house. They can't go to work. They can't do anything. The ports are shut down. There's thousands of ships offshore waiting to be loaded. Now they're starting to loosen some of those restrictions this week and into next. So finally we may start seeing these ships being loaded, but they got to go across the Pacific Ocean. They should be unloaded now in America. They're not even here yet. And then you're going to have the same problems at the ports that we had before, where there are going to be too many ships to unload. You're going to have 100 ships offshore, and you're going to have supply chain problems. I mean, it's a perfect storm. There's one thing after the other. We're seeing the worst pandemic in poultry that we've ever seen right now. Bird flu. I think 40 million chickens and turkeys have been killed or died from bird flu in the United States. You try to buy eggs lately, you see the price of it. Yesterday I was in the supermarket and I was buying chicken, and I was talking to the lady that was stocking, and I'm like, $3.70 for chicken per pound? She goes, oh yeah, it's going higher. We're concerned we're not going to be able to get all the chicken we need. The baby formula shortage. I mean, we told you about this 3 or 4 weeks ago. Before it was all over the news, I was telling you, I was warning you about this. Now it's really critical. I couldn't imagine having an infant and worrying about where I'm going to get baby formula. And this is a disaster for the Democrats, and the president. Once you start dealing with kids not being able to get baby formula, I don't care if you're Democrat, I don't care if you're a Republican, you're not happy. And that hits home. Now, of course, now the president came out this week and says he's going to institute the National Defense Act or whatever it is, and have us try to ship in from overseas baby formula. The FDA finally allowed the Abbott company to start up their plant again. Abbott makes 40% of the baby formula. They were shut down in February by the FDA because 3 kids had a problem with some bacteria. Now they're saying it had nothing to do with the baby formula, whatever. So now with all the pressure, the FDA says, all right, you can go up and start producing again. But it's going to take 2 weeks before they even start producing it. It's going to take about 6 weeks to 8 weeks before they even make it to the shelves. The UN is telling us that we're heading into the worst global food crisis since World War II. In some parts of Africa, the number of people suffering from extreme hunger has already more than doubled. just this year. Let me tell you something. When people are hungry and they can't feed their family, you have civil unrest. We've seen it in Sri Lanka, where protesters are burning down the homes of politicians. They destroyed 75 homes because they're really upset with the government. And it comes to food shortages and inflation. We know that the Fed came out this week. They're going to aggressively continue to increase interest rates into a softening economy, into a bad stock market. I mean, this is a disaster. I mean, I just don't understand the Federal Reserve. They're not going to do enough. The only way interest rates are going to affect inflation is if they crash the economy. Yeah, that'll do away inflation. We'll have deflation. People will be going bankrupt. People will be walking away from their homes. You'll have another mortgage crisis. You'll have another financial crisis. The banking system will be at risk. But we'll get inflation down. As I said before, higher interest rates are devastating to the housing market. Home sales have fallen for 3 months in a row. Of course they have. If there's one tenet of economics that you could take to the bank, is raising interest rates, raising mortgage rates are bad for housing prices. Defaults are starting to rise, especially in the subprime market. Defaults on subprime loans are starting to surge. Consumers with low credit scores are falling behind on payments for car loans, personal loans, and credit cards. A sign that the healthiest consumer lending environment on record in the U.S. is coming to an end. The share of subprime credit cards and personal loans that are at least 60 days late is rising faster than normal, according to credit reporting agency Equifax. In March, those delinquencies rose month over month for the 8th time in a row, nearing their pre-pandemic levels. Delinquencies on subprime car loans and leases hit an all-time high in February, based on Equifax's tracking that goes back to 2007. And as the economy slows down, you can expect layoffs to increase. You're going to see jobless claims starting to go up. And needless to say that all these bad economic news is going to be really bad for stock prices. You got to get out of the market. You got to lower your risk in the market. I'm banging the table on this. The risk that people have, they have no idea. And so many people are so close to retirement right now, and their 401ks are 85% in the market. It's just nuts. I mean, the S&P 500 and the NASDAQ are already in a bear market. They're 20% down. We're in a recession now. They're going to say 3-6 months from now, the recession started in the spring of 2022. We're in it. We're starting to see the first quarter, we saw a contraction in GDP. My guess is we're going to see another contraction in the second quarter. That's a recession. And the historic, I said for a few years now, that we're going to have an historic economic downturn. And it's rapidly approaching now. We're seeing it in the stock market. We're seeing it in inflation. We're seeing it in housing prices. And the mood of our country, the mood of the nation, is going to go downhill really quick as things deteriorate. Too many people are just struggling to get by. It's tough enough for most families, and now with the inflation, which is making it worse because now utilities are more expensive. Gasoline is more expensive for the car. Food is more expensive all across the way. So tough economic times, unfortunately, and it's going to get worse, unfortunately, before it gets better. All right, top of the hour, 732-237-9626 is our call number if you want to be part of our program. My name's Lou Scatigna. We'll see you on the other side of the break.